Hello everyone, I am Dr. Enag Lakshmi, Assistant Professor, Department of Commerce with Finance in Dr. SNS Rajalakshmi College of Arts and Science, Coimbatore. Now I am going to make an explanation in the topic Institutional Framework, Advantages, Limitations and Ethics in Mutual Fund Management, the course Mutual Fund Management. Now we shall see what does mean by a mutual fund. So mutual fund is nothing but it is an industry operates with a structured framework involving regulatory bodies, operational entities and guidelines to ensure smooth functioning and investor trust. In India, SEBI is the primary regulator setting rules for operations, disclosures and investor protection. So as we saw what is meant by mutual fund in the previous video, now we shall see the framework of mutual fund. So it's a framework involving regulatory bodies. So someone is regulating the mutual funds, its operational entities and the guidelines for the smooth functioning and the investor trust is a very important concept of the SEBI. Here the SEBI, that is Securities Exchange Board of India, is a primary regulator who sets the rules for the operations, who disclose and who protects the investors. Okay, now we shall see the key components. What are the key components? SEBI is the first component, regulates mutual funds, ensuring compliance with the AMFI guidelines and investor safety. What does mean by AMFI? Association of Mutual Funds in India. A self-regulatory body promotes best practices and investor education. So it's one part of SEBI which regulates the mutual funds and it gives the best practices to be done in the mutual fund and it gives education to the investors before making the mutual fund investment. Fund houses, asset management company, that is it manages the mutual fund houses. AMC, asset management company, is one of the heart of mutual fund where the funds are managed by the fund manager. Professionally managed fund managers will be there in AMC. Custodians, holding and safeguarding the securities of mutual funds. Distributors, agents or platforms that facilitate the sale of mutual fund units. So these are the key components of mutual funds. Now we can see the advantages. What are the benefits? Why why the investors are choosing a mutual fund as a popular investment choice for them. So there are some reasons. Those advantages are now going to be explained. Diversification, that is not investing in one portfolio, so that it will be the risk will be reduced. So diversification, it is professionally managed by the fund managers. Then liquidity, easily it can be converted into cash. Flexibility, that is we can make the investment in mutual fund either as systematic investment plan SIP, or it can be invested in that is systematic withdrawal plans SWPs, and we can make the lump sum investments in mutual funds. Tax benefits, certain funds like ELSS, equity linked savings scheme, it offers tax deductions under section 80C in India. If we make an investment in mutual fund in the form of ELSS, so we can get tax reductions under Income Tax Act under the section 80C. There is low entry barrier, so it is not that is minimum 1 lakh is needed, minimum 2 lakh is needed. No. So here even 500 rupees is enough to make the investment. So offered of small investors with minimum investment amount. Transparency, so regular updates of funds, holdings, expenses, everything will be properly communicated to the investors. Now we can see the limitations. What are the limitations? Despite the advantages, mutual fund have certain drawbacks that investors should consider. So everything has that is favor and against, that is unfavor will be there, demerits will be there. Now here mutual fund also have the same, some limitations are there for that investment. Market risk, so we know that mutual fund is a part of share trading, so it involves market risks. Returns are subject to market fluctuations, there is no guaranteed returns. Fees and expenses, so management fees, exit load, expense ratio, reduced overall return. So these expenses will be taken from the returns. So management fees, exit load, expenses ratio, everything was calculated from the returns, so the returns may get reduced. Lack of control, investor cannot influence a fund manager's investment decision. So fund managers are professionally expertised, means also here the investors does not have the rights to give the proper guidance to the to the fund managers regarding the investment part. Over diversification, excessive diversification may dilute returns. Tax implications, so capital gains for mutual funds are taxable depending on the holding period. So till 5 years, if I did not touch any amount, normally 1 year period we should not touch the amount. So if I make the investment for 5 years or 10 years, then the returns will not be taxable. If I make the that is, if I withdraw before 1 year period, then here it is taxable, as well as exit load will also be calculated. Liquidity issues, so when if I go and make an investment in open ended funds, it is possible for me to make the buy or sell at any time on the business day. But in case of closed ended funds, it have limited liquidity. Now we shall go for the ethics in mutual fund. Ethics means how the mutual fund has to operate. So ethics in mutual fund refers to maintaining transparency, fairness and accountability in operations to protect the investors' interests. So the ultimate aim of the SEBI is to make the investors comfort. So they should be given proper transparent information about their funds. Fairness should be there, and investors' interest is to be properly maintained. So SEBI and ANFI enforces strict guidelines to ensure ethical practices. So now we can see what are the key ethical practices. Transparency, disclosing of NAV details, expenses ratios regularly to the investors. Fair treatment, ensuring all the investors are treated equally, avoiding favoritism. Avoiding conflicts of interest. Fund managers must prioritize investors' interest over personal gains. Complaints and regulations, adhering to the SEBI and ANFI guidelines. Investors' education, promoting awareness about risk, returns and fund objectives. Prohibition of insider trading, ensuring no misuse of privileged information. So here ultimately the mutual fund has to be in favor only for investors, not for the people who is associated officially with the mutual fund company. Challenges: mis-selling by distributors to earn higher commission, churning of portfolios to generate fees which may not benefit investors. So here what they are telling us, mutual fund should properly follow the ethics in order to ensure investors' interest. Thank you so much for the patience listening.